So from the calculations on that timeline, we were able to identify the portions of the profit of the subsidiary that's attributable to the different equity participants. So we have a consolidation journal entry where we keep on measuring that NCI balance, moving from the equity of S a portion to them, so that after you've added 100% P and 100% S, the effect of this consolidation journal entry is that you are left with the portion attributable to the owners of the parent. Journal 7 is where we attribute the profit to NCI ordinary shares, and there's the 36,000 Rand that we've calculated. And we then have profit attributable to NCI for my NCI preference shares, and there's the amount of 6,000 Rand. So if I now have to prepare a consolidated splokkie, how much will I present at the bottom section as profit attributable to NCI? It will now be these two amounts added together, and the total profit attributable to NCI will be 42,000 Rand. So that's also what you achieve through writing these consolidation journal entries. Just a final comment here with the 10,000 Rand that we exclude. This 10,000 we excluding there is the X10 dividend that these cumulative preference shareholders are entitled to. It's got nothing to do with the actual 30,000 Rand dividend declared relating to previous years that's in arrears. The only consolidation journal entry that we haven't looked at yet is the intra-group journal, and the only intra-group transaction identified in this example was the preference dividend declared and paid by the subsidiary. This is now where you work with the actual dividend declared. That's why you eliminate the full 30,000 Rand dividend declared and paid by S against the 40% dividend income recognized by the parent. That will change the profit of the group, and then your debit movement to non-controlling interest being the 30,000 Rand times 60%. There was no ordinary dividend declared by the subsidiary, so therefore this is the only dividend elimination journal entry for this example. What I want to do now is just take you through the analysis of equity and show you that everything we've done on the timeline is what's happened in the analysis of equity as well. So if you're comfortable using the analysis of equity, please do. The message I want to get across is that it's useful, that it's helpful, and it really gives structure to your calculations so that you end up writing all those consolidation journal entries for NCI. This is the ordinary share analysis. The at acquisition section I'm not going to look at. We discussed that when we did the at acquisition consolidation journal entries. What I just want to point out is all the decisions we made on the timeline, we also make on the analysis. In the retained earnings since to opening balance period, please remember you take the TB amount of S, you deduct the actual at the full movement that you are left with, and then because the cumulative preference share was in arrears for 1 year during that period, you are left with the amount attributable to your ordinary shareholders, which you then attribute. And all the amounts in this NCI column, that's all the amounts you need to write the journals for. And I've shown you the journals. Just see how the analysis really helps you to get to those amounts. For the current reporting period in the analysis, the profit for the year is again the TB profit, nothing else to adjust for other than to exclude that X10 preference dividend that the cumulative preference shareholders are entitled to. What's left is attributable to the ordinary shares, and there you have a consolidation journal entry necessary for the 36,000 Rand, and I've shown you that journal entry. Please note there is no dividend in the ordinary share analysis because no ordinary dividend was declared. In the preference share analysis, the at acquisition section, again, I have discussed when we looked at the at acquisition consolidation journal entry for the preference shares. Then in the since to opening balance period, the amount that you've moved from out of the retained earnings movement of the ordinary shareholders, the 10,000 Rand, ends up in the preference share analysis. This gets attributed to the preference shares, and the moment you have something that changes the balance of NCI, you need a journal entry. Same for the profit attributable to the preference shares. It is the X10 preference dividend that they are entitled to. That gets attributed to your parent and NCI as preference shareholders, and again you have a journal entry for the portion attributed to them. Then the preference dividend declared, and this is really important. You have to realize that the dividend you put in here is the actual dividend declared, because that's the actual movement in the equity of the subsidiary, and this is the 30,000 Rand. But what I'd like you to see now is now you can understand what that 30,000 Rand relates to. The 30,000 Rand is declaring that 20,000 Rand that you've attributed to them at acquisition date, and the 10,000 Rand that you've attributed to them in the since to opening balance period. That gives you the 30,000 Rand that was declared in the X10 period. This 10,000 Rand attributed to them in X10 is an additional amount attributed to them relating to the X10 reporting period. This dividend line item, if it's in your analysis, you remember about it. You remember that there's income that I have to eliminate from the income of the group. There's a debit entry to my NCI in the statement of changes in equity. So if you look at an analysis of equity, I would find it useful when I have to prepare my consolidation journal entries. I will also find it useful when I have to prepare the equity section of the consolidated statement of financial position. I will also find it helpful if I have to prepare a statement of changes in equity, very helpful there. But if I have to do a consolidated SPLOCkie, I don't think it's necessary to prepare the entire analysis, because the only amount from the analysis that you need to prepare the consolidated SPLOCkie is really this profit attributable to your NCI, both from the preference and ordinary share analyses. And therefore, I will not go through this entire calculation if that is the only amount I'm going to end up using. Keep that in mind. Use it when it's useful, because otherwise it will only end up wasting your time. But if you use it when it's useful, it will really add value to your suggested solution. Right, so still looking at example 8.2, we'll take you through the consolidated statements, but only pointing out a few things. Remember, we did go through those statements in a lot of detail in example 8.1. Now that you know what the additional and adjusted and different consolidation journal entries are in 8.2 as an example, you can just keep on following the approach we did in example 8.1. See where those consolidation journal entries end up changing the line items, and that will end up bringing it all together in my end product, being the consolidated financial statements. In the consolidated statement of financial position, I just want to show you the goodwill. Remember, we started off with goodwill in the at acquisition journal for the ordinary shares, but we had to offset the gain from bargain purchase against that to only have one amount presented in the consolidated SFP. Always remember the basics in a consolidated SFP line by line. It's always 100% P plus 100% S adjusted for your consolidation journal entries. And consolidation journal entries very specifically includes all those NCI amounts that you end up moving out to the NCI as a separate equity item in the consolidated SFP. Remember the two headings, equity attributable to owners of the parent and NCI, share capital only always that of the parent because we've applied this principle. For retained earnings, please refer to the statement of changes in equity. But for NCI, remember this closing balance, as I've said before, is now adding all those amounts coming from your analysis of equity together, as it represents the closing balance for NCI.